Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, April the 18th. The year's 2021. Let's talk trading. It's time for the weekly open and gap. It's also time for me to tell you these videos are for educational purposes only, and your results may differ from mine. So let's get right to it and take a look at the weekly chart. You can see we still have some open gaps, with the pound being one of them. So for the weekly gap traders, you still have a chance to take advantage of that statistic. We are in the opening range for the month, which is the high and low of the first day of the month. You can see we're way outside the opening range for the year, and of course we're putting in the opening range for the week at the moment. As far as the year goes, we're 182 pips above the yearly open, and we're 45 above the monthly open. Inside bar traders, you have a lot to choose from this week. Look at all that blue and gray between the daily, weekly, and monthly inside bars. So the weekly inside bar trigger is at 38.51. Let's call it 38.52 to go long. And on the short side, we've got a trigger at 37.06 for the weekly inside bar. So far today, we've been in this, let's see, we're about 5.5 hours into the trading day. No ranges over 100 at the moment. And we can see that the Friday was an outside bar. Buy zone traders, let's see, if you faded the pivot here, you might have gotten your fingers burned, unless your stop loss was up here. On that second and third attempt, fourth attempt here, there was a few pips to be had. That daily pivot's down at 37.97. We haven't touched it yet. Rat, only 24 pips in range, so there's no rat trade at the moment. As far as the pivots, let's see, we've got a daily pivot here at 37.97. And we've got a weekly pivot, it looks like, at 37.81. We can look on the next chart and see what it says. Daily pivot 37.97. Look at the weekly 37.81. We've had one missed pivot so far this month, and that's the current one. So these pivots have been taken out. We do have one from February 28th at 1.418, this one right here. But the others have to go back to last year and beyond. And just to take a look at the monthly pivot, we've already taken that out, so nothing to be had there. As far as the wick zone goes, right now we're in between zones. There wasn't an upper wick zone because price closed at the high, which is kind of a rare occurrence. Once again, the daily range, we've only got 5.5 hours, so there's not much of a range. Ditto for the week. But once again, looking at last week, we only had 16%. The 170 pips was only at the 16th percentile. So kind of an anemic week last week. So we might look for some explosion possible. As far as where we are, we're only 4 pips under that previous week's high. As far as the low, we're 141 pips away from it. So we'll just have to wait and see which way price wants to move this week. All mall traders, if you took the trade this hour, you were rewarded. You could be up 7 pips if you haven't already punched out. I'm trying to remember. I think they were questioning the wall mall method, and I guess, you know, my only advice is just trade it as it is. Don't try to improve on it. And what I mean by that is don't try to filter out the trades other than, the Walmart usually is looking at the M5 chart, and he usually wants to take that. He'll wait for a second touch. So for example, right here, there was a first touch at the 20, and here's the second touch. You can see it went up, came back down, and then took off. So that's the way he likes to trade it. But if you just play it straight, don't worry about each individual trade, put your stop loss in place, sit back and grab some pips. Because there's nothing else you can really do. You can throw all the indicators on the chart that you want, all the squiggly lines, all the esoteric formulas. It's not going to make one bit of difference once you enter the trade. Because if you think about it, most of the work comes pre-entry. You're doing all the chart analysis and chart markups and trying to figure out which way to enter and at what price to enter. Once you click the mouse and you get in the trade, you don't need to do that anymore. Basically, you're managing risk and you're managing money. And most importantly, you got to be managing yourself. Because if you rush into the trade or rush out of the trade, who knows how many pips you might leave on the table. And you'll just wind up frustrating yourself. So, if you're taking this stuff seriously, then what you have to do is, as I guess there's one trader saying out there, he took the trained monkey to heart, and he's even referring to himself that way. You just have to do as your method dictates. You have to follow your plan. You can't be concerned that this trade is a loss. That's just part of the game. You move on, wait for the next trade, enter it. And if that trade's a loss, once again, you just move on, enter the next trade. Now, if you take, say, 5 or 6 losses in a row, it might be time for you to do a little more study on exactly what you're doing, because maybe you're not following the method. Maybe you think you are, but maybe you're really not. So, once again here, you might have taken your 5 pips, price came around. Maybe you jumped back in when price failed to close below this line here. You see it's moving up. So, with this sweet spots indicator, price gets between 2 lines, it's going to leave. It's going to leave either to the upside, to the downside, or it might try both sides. So, price was in the 30s, came back to the 20s. Price was in the 20s, came back to the 10. Price went down to the between 0 and 10. Had to leave there, so it came back to the 10. Had to leave there, so it went to the 20. Had to leave there. It went over 30, and then it just got pushed back again. Sometimes, like when I get in a trade, let's say if I would have gotten in a trade off of this 3 ball, I might look to get out at a 1 ball. There's probably a 1 ball, either here or here, came in. And so once I see that, I'll just punch out. I'll take what pips I get and then see if I get another entry. So, and a lot of times, if you have the stomach for it, if you can do it, you can go from 3 ball to 3 ball. But as you can see, it's an up and down ride. But that's where sometimes the big money's made on one trade. But if you take a little bit here, take a little bit here, you might not get as much from here to here, but you might get the lion's share. And the other thing is that you're protecting your downside. You're protecting it. It's like you go and you take profit. Here, profit. price was coming down. You don't know if it's going to keep doing this or not. So you take some profit. Then if you can, maybe you can get in. You could maybe even get in at the place where you got out. If price is signaling, hey, let's go this way now. And that's just something that you'll learn, as Walmart says. You just got to have the screen time, and spend the screen time with just one pair. I mean, Walmart was saying the other day, he goes, I guess that I have the ability to kind of say where price is going to go over the long haul, whereas he knows where it's going to go over the short haul. So for me, and all I'm saying is I just look for price to fill pivots, because it usually does. And I think I had mentioned, let's see where, let's get to the pivot chart here. You can see here, it's like, yeah, there's some missed pivots on H4, but for the most part, they get taken out. And so sometimes I'll look at the H4 candle, I'll see which way it's going, and then I know it has to range just like the H1 has to range, and that's what I'll target. So for example, right here, price, let's see, what's today? Well, I think this was the close of Friday. And then you can see here it tried to hit that pivot, and I don't know if it did or not. Let's see, 38.34, high 33.9. It missed it by a point. So right here, I may have faded the pivot, but I also would have said, hey, as soon as this thing turns red, probably wants to take out this pivot. And as you can see, it did. So those are the types of things I look for when trade. So right now, you see there's this missed pivot right there. And what I'm thinking is that could be that could definitely be a potential to take some profit. So, but that just, once again, just comes with screen time and running statistics. In fact, there was one trader that was asking about statistics. So I'm going to pause the video and pop up a different chart here. Yeah, there was a trader that was asking about the range per hour, the average range per hour. He saw something somewhere. I said, yeah, I've got an indicator, and it's the TRO 2020 frequency distribution hour day range of curves. Now, notice I've got a day filter here. So this is all the data is just the Mondays. You can go here and you can change that to false. And what happened? There's something else I didn't do. My day auto. Let's see. Sometimes I should practice this before I make the video, because there's a that is interesting. What did I do? I'm gonna have to figure something out here. Use day filter false. And I haven't set the true. I might have to look at something in the code. So, what this is showing here for this particular hour, we're testing to see if you have more than 13 pips per hour. And only 2 times out of and you did, and 6 times you didn't. Then it gives you the average, the minimum, and the maximum, high minus low. So anyway, I got to look at that code, and I'll come back and let you guys know how to set it up. Unless maybe there's a mistake in there. I might have changed something and didn't test it. So we'll see what happens. Anyway, I hope you had a fun and safe weekend. I hope you have a profitable trading day and week. Just remember, it's not what you trade, it's how you trade it. So drain the banks. This is TheRumpledOne, over and out.